Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Welcome back to the show, John.
Hey, Jim.
John, the Fed had their latest meeting. What did we learn from that?
This is a really important Fed meeting and a really interesting one because everybody expected, with inflation running at like 6% in the U.S. officially, and quite a bit higher than that in reality, everybody knew the Fed was under a lot of pressure to act, and people were expecting something pretty dramatic. Instead, the Fed upped its tapering pace. In other words, it's going to buy less and less government debt going forward, and they increase the speed at which the amount they're buying is decreasing a little bit. And they said they might raise interest rates 3 times in 2022. Taken together, those things are pathetic. That's not tightening at all. We still have 0% interest rates at the short end and below 2% for most of the long end of the yield curve, which means massively negative interest rates. When you subtract out inflation from the rate on, say, the 10-year Treasury, you get like a negative 4%, which is about as loose as monetary policy is possible to be. So, they didn't really do much of anything. And the stock market immediately spiked on that news, and then rolled over today and tanked, took back all of the Fed bump. And so we're trying to sort out what it means. But basically what it definitely means is that the Fed has kind of capitulated here. They know they can't ever tighten. So they're trying to slow down inflation without actually doing anything to slow down inflation. And it's not going to work. This is a very, very serious change in market psychology that we're seeing right now. Gold and silver spiked and stocks tanked today. That could be a sign of the future for a long, long time to come.
When we have an outlook like that, is this a case of the government is so deeply in debt, if interest rates went up, it could, crash the whole economy, couldn't it?
Yeah, this is the problem for all the world's central banks, really, and all the world's governments. They've created a society that's so deeply in debt that it can only survive, it can only avoid imploding if the cost of money stays extremely low. And because of that, they can't ever raise interest rates in a meaningful way because that increases the cost of money, which will bankrupt millions and millions of entities around the world that either need to continue to borrow at a low rate or need to roll over existing debt at a really low rate. One or the other, and you take those two groups together and it's most of the world. So, the Fed and the other big central banks know they can't ever really seriously raise interest rates, but they also know that if they don't, there's a real danger of inflation just spinning out of control. So they're in this box in which everything they do is very dangerous and potentially so wrong that it'll make them the Herbert Hoover of this generation. They'll be writing history books about how the Fed screwed up. And they kind of know that, so I'm sure it's costing them some sleep. But, since they're the arsonists who started this fire, the fact that they can't put it out is not something to feel sorry for them about. They made this bed, they got to sleep in it.
Well, our friend of the show, Wolf Richter, who we interview on a regular basis, says inflation is going up a lot higher, of course, than the government says it is. Upstream producer prices are rising by 28%. Another friend of the show, Tim Cyclesman Wood, believes if this was really a case of money printing causing inflation, yes, they would have raised interest rates to slow it down. But he says the inflation is being caused by supply chain problems. That's the reality, because the economy itself isn't increasing like we usually see in inflationary times. So does this mean that whatever the Fed does, it's going to turn out wrong?
Well, it's very important about what you said about inflation being much higher than they're reporting, because if we were reporting inflation, calculating it the way we did back in the 1970s, it would be about 12% annually in the U.S. rather than the 6% that they're reporting now. So we actually have inflation that's as high or higher than it was in the 1970s, which was a time of absolute currency crisis, total monetary chaos back then. And we're in pretty much that same predicament right now. And as you're right, Wolf Richter pointed out that if you dig into the producer price index, you see that further up in the supply chain, prices are rising even further or even faster. And as that works its way through to the actual producer price numbers, and then from there to the actual consumer price index numbers, we might be seeing inflation that, even as the government reports it, even with the fraudulent government numbers, it's at a double-digit increase. And that would just be catastrophic. Yeah, it would be a mess on so many different levels. We can talk about some scenarios if you want, but suffice it to say that this would be something that would be almost uncontrollable. Once the world starts expecting 10% inflation or more going forward, they all the players out there act accordingly, which is to say they buy everything they can right now so they don't have to buy it later at higher prices, which pushes prices up even more, which leads to even more panic buying. You get into that kind of a death spiral, and it's very hard to get out of it, because it's hard to change people's minds, and it's even harder to change their minds back when they've decided that something is not true and something else is true. So that's where we are, and it was always coming. This is the kind of thing the sound money people have been calling for years. Gold bugs have been predicting this as imminent ever since like the late 1990s. So it was a long time in coming, but this is kind of what would be expected with the kind of mistakes that we've made. So we're here now, and assuming that the rest of it plays out according to script, there's no fix. It's just very bad monetary times as far as the eye can see.
Mm-hmm. Now, of course, following, the rampant inflation of the 70s, the governments didn't want you to think it was that bad ever again. So they removed fuel, the price of a house, and the cost of taxes on you from the cost of living index. So that's why inflation every year, they say, is around 2%. And for most people, that's the most pay raise you would have got is 2%. But if you look at house prices anywhere in the U.S. or Canada, they were certainly going up more than 2% a year. And fuel prices, take a look at what people are paying now for fuel. They didn't go up just 2% a year either.
Yeah, the house thing is especially galling, because that's a really big part of the cost of living, right? If houses get more expensive, then your life gets more expensive in a lot of different ways. And back then, back in the 1970s, we just counted the increase in the average home price as part of the cost of living, put it in there. But they took it out after the mess of the 1970s. And now they have this thing called owner's equivalent rent, which is this completely made up number that they can basically call anything they want, which is always much lower than the actual increase in home prices, or usually much lower. For instance, this year, I think owner's equivalent rent went up like a couple of percentage points, but houses went up in the U.S. by, depending on the market that you're looking at, 15 or 20% for an average rate of like 16% overall. So if we had just plugged that back into the consumer price index, we'd be looking at like 12% inflation right now. And then there's a couple of things you didn't mention that are also very strange and disturbing and easy for the government to manipulate are something called substitution, where if, say, the price of beef goes up, they assumed that people would switch to chicken. So they overweight chicken or tuna fish or whatever, and at the expense of the thing that went up in price in the consumer price index. And so in that way, they hide the true effect of price increases in certain things. Another thing they do is called the hedonic adjustment, where, if you paid $1,000 for a computer 5 years ago and you pay $1,000 for a computer now, that would kind of imply zero inflation, right? But they say, no, today's computers are so much better than the computers of 5 years ago that it's actually deflationary. We're going to cut the cost of that computer in our calculations, the new computer, and that makes inflation go down. Well, yeah, except that, there's no way for us to check that, is there? We can't dig into the database algorithms used by the statisticians of the government to see if they're really adjusting correctly. This is basically a black box that they can use to make the numbers say anything they want. And they've been doing that for years. They've been, as you said, keeping inflation low enough so that cost of living increases built into Social Security and other, pay contracts are low enough so that people don't make more money the way they would otherwise to offset the rising cost of living. So it's a way of impoverishing people while keeping government budgets a little lower than they would be otherwise. So it's a really despicable policy. And it's one that's blowing up in their faces now.
Something you don't have in the U.S. is a goods and services tax, a GST, which is levied by the federal government. So it's based on a percentage of whatever good you buy. So with inflation, the government makes more money because, of course, you're paying higher GST on everything you buy. So for the government, inflation's a good thing.
Yeah, see, that's a really pernicious way to set the thing up, because it's better when the government wants inflation to be low. It's an incentive for them to manage their finances better. And when they start benefiting from rising inflation, then you've got moral hazard piled on top of moral hazard for governments. And you can just about guarantee that they're going to behave really badly. So it's no surprise, given the incentive structure, that all the world's governments are basically behaving like teenagers with their first credit card and spending money on anything they feel like to win the next election or to invade the neighboring country or whatever it is they want to spend money on. They are able to do it because they have this unlimited printing press, or, unlimited credit card, if you want to think of it that way. And so it's no surprise that we ended up with the mess that we've got. But the question is, what do we do about it as individuals? How do we get through this without being impoverished ourselves? Because we're already partially impoverished by the last 20 years of the 1% siphoning money away from everybody else via artificially low interest rates, among many other things, and government money printing that goes straight into the pockets of billionaires. So how do we stop that and reverse it? Get some back of what has been stolen from us and invest wisely going forward to make money from the chaos that's coming. So it's a big intellectual challenge, but it's also really interesting. It's an investment thesis that is fun to contemplate.
We'll have more with John Rubino right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with John Rubino. John, the Canadian government, before COVID struck, was spending at a rate, if you take population and all the other figures into account, they were spending money faster than Canada was during World War II, the world's most expensive and extensive war. Now, how do they explain that? Because COVID hadn't even hit yet. And now they have another $28 billion in extra spending, because it's almost like someone said, well, your credit card limit was just up, so you might as well max out again. The governments have any idea how to get their spending under control? Because we all carry that debt no matter how responsible we are with our own credit cards.
Now, governments have absolutely no idea what they're doing, how they got into it, or how to get out of it. Because remember, this generation of politicians has only known free and easy money for the government. Because the U.S. took the world off the last vestiges of the gold standard in 1971. So all of today's politicians came on after that. And all they've ever known is, you want to spend money on something, you need to buy an election, you go ahead and do it. You borrow the money and then you worry about it later, And so they all hope to be able to retire rich, famous, and well-respected and hand off the mess to their successors. And so far, it's worked out that way. Everybody who's come and gone in the political scene since the days of Richard Nixon has basically lived in that very easy time to be a politician when you didn't have to say no to any major constituencies. That day is changing. We eventually have to go back to sound money, which is to say limited amounts of money for governments, in which governments have to make hard choices and say no to important voting groups and do all the things that we thought we were paying them to do, make the hard choices. Because if they're just making easy choices, who cares who's there, And eventually we're going to have to replace this bunch of overgrown children with actual statesmen.
Of course, in Canada,
actually willing to...
Yeah, with actual statesmen willing to make decisions that are tough, which, of course, politicians nowadays, somebody said, what's the primary job of every politician? And I said, to get reelected. As long as they have that attitude, they'll give you what you want. They don't say, this is what you should have or what the country needs to do. It's, what do we need to do to get reelected?
Yeah, and that's always the case with a politician. That's really their main job, is to stay in office, because from their point of view, they can't do any good if they're not in office. But eventually the marketplace is going to change the environment for politicians so that just spending money is not going to be the best way to get reelected. Actually making hard choices, explaining those choices, and then making sure people understand that this is basically the best that's possible in the moment, and preventing chaos. You do those things in a normal world, and you've got a good shot at getting reelected. And now, that's not good enough. You've got to be able to keep every single constituent happy with new money, and that's actually much easier when you've got an unlimited credit card like most governments do now. Well, we're going to go back to the old way, where there's a limited amount of money, and you got to sit down like a family at the kitchen table and figure out who gets what and who doesn't get everything they want. And then you've got to make sure everybody understands that that's the best deal that's possible. That's way less fun if you're a politician. Just like, parents with a really limited budget, it's way less fun to raise kids than if you have plenty of money and, the kid can get the new iPhone and the other one can get a car. It's much easier than having to say no to all that stuff to your kids. Well, politicians are going to be in that spot pretty soon. And that, Jim, that's if we survive as functioning societies, That's the best case scenario, is that we go back to sound money and we do it the way we used to do it. That's not the most likely scenario. The most likely scenario is absolute chaos followed by collapse, followed by a really hard time in which we educate ourselves about why we made the mistakes and how we collapsed, and then try to build something. It's going to be a decades-long process of us coming to terms with the mess we've made of the world and figuring out a way to go forward in a sustainable fashion instead of this chaos that we've brought upon ourselves. We do have a template. We have several templates, but the way the U.S. was originally designed, with limited government and individual rights and sound money, that would be one way we could do it. Just go back to the original Constitution of the U.S., and define money very strictly as something that cannot be created on an electronic printing press by governments, define the powers of government very explicitly, and that's it. You can't do anything except these things we say you can do, and then the rest is up to the states and to individuals. We could do that.
I always wondered what happened to the pursuit. I always wondered what happened to the pursuit of happiness. The government seems to have done a very good job of quashing that. Because I thought, well, what a nice thing. Well, if it makes you happy, do it, as long as it doesn't hurt somebody else. I think that's what they meant.
See, the governments of the world would say they're promoting the pursuit of happiness by pushing interest rates down way low so we can borrow money to get whatever we want. They're not really understanding the concept, though, when they just make it easy for you to get deeply in debt as a way of helping you pursue happiness. That is not how it works. So we'll have to go back to some old way at some point. But in the meantime, how do we make money to protect our family? That's the main thing I focus on, is how you structure your finances to not just protect yourself. Well, that's a very big deal, but to actually profit from all of this stuff. Also, when they wrote The Pursuit of Happiness, all drugs were legal. Opium flowed like wine because they did put it in the wine.
Yeah, and cocaine was legal. It was in the original Coca-Cola.
Yeah, it wasn't seen as a power of the government to determine what we put into our bodies, among other things. So yeah, there's a lot of first principles that we can pull up and debate and maybe go back to that I think would be very useful. It won't be pleasant because it means all of us giving up the benefits of extremely easy money, and you take that away and everybody realizes they have to live much smaller than they have been. And that's never a pleasant thing. But when you're broke, that's how it works. You screw up your finances, you screw up your life. And we have royally screwed up our finances.
What do you think the future for gold and silver is, given our accumulating debt?
I think the future for gold and silver is a whole bunch of days like today, when both of them were up nicely and the mining stocks were up big and money flows into sound forms of money. In other words, unsound money flows into sound money. So people are cashing out their financial assets and they're moving into real stuff. That is rental houses, energy assets, farmland, gold and silver, and a few other things. Those things do really well in eras when governments are destroying their currencies. So if you want to be safe and possibly really profitable, it makes sense to start moving your bank stocks and your bond funds and all that cash in your checking account into things that governments can't ruin. And the quickest way to do that is buy a bunch of silver coins. Of course, just stack for a while. Just get some silver, put it in a very safe place, and keep adding to your stack. And you will have a form of money that's going to do way better than your cash and your other financial assets.
John, thank you so much for chatting with us.
Thanks, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. If you have any questions for John, we'll gladly ask that question for you if you send it to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.